Now we're going to do Chapter 3, Problem 6b, which is also in your handout. So again, go get your handout. If you go ahead and print off the one on Moodle, you also have the solutions, but I would suggest that you write out the answers to the solutions. You remember better if you write them out. So what I've got over here is what's left from Problem 5a, so we can ignore all this right here. But anyway, so at the end of August, the first month of operations, the following selected data were taken from the financial statements of Tucker. So we had net income, total assets, total liabilities, stockholders' equity. So assets equals liabilities plus stockholders' equity. So let's make sure they balance. So 225 plus 425 is 650, so they balance. In preparing the financial statements, adjustments for the following data are overlooked. So even though it balances, I didn't make some journal entries. So I need to now journalize my entries. But basically what they're saying is make the adjusting entries. So again, I'm going to go through the same process as I did for 3.5b. Make sure you write out your, oops, wrong side there. Make sure you write out your, I'm going to ask myself, do I need a revenue or expense? Has it not yet been paid, or has it already been received? Okay, so this side. Right, I just put these down there because there are times when you don't use the account prepaid, but prepaid expenses are assets. Supplies are assets. Accumulated depreciation is a contra asset. So these are sometimes called converting assets to expenses. Keep getting on the wrong side. Okay, so unbilled fees earned, ask myself, is it a revenue or expense? It's fees earned, so it's a revenue, so I credit a revenue. If I haven't yet billed them, then I haven't yet received them, so I need a debit to a receivable. So debit accounts receivable, credit fees earned for $31,900. Depreciation on equipment for August was $7,500. So depreciation is a cost of doing business, so it's an expense, so I debit depreciation expense. Whenever you debit depreciation expense, you always credit accumulated depreciation. Shouldn't say always. Maybe if you're correcting an error, you wouldn't, but in this class, you always will. Accrued wages at August 31st are $5,200. Accrued wages are wages we need to owe people, so accrued means accumulate. So our employees have earned some wages, but I haven't yet paid for them as August 31st because maybe I only pay every Friday and August 31st falls on a Tuesday. So for whatever reason, we haven't yet paid them. So wages are a cost of doing business, so that's an expense. So I debit wages expense. And I haven't yet paid them, so I credit wages payable. Next one, supplies used during August of $3,000. So unlike problem 5b, this one tells us how much is used. So I always expense the portion used. So I debit supplies expense and credit supplies. So there's your journal entries for that. All we do is say, okay, that's an asset. So I need to add that to my assets. Let me make this side up. I've just increased my assets by $3,100, and I just increased fees earned by $31,900. And revenues increase stockholders' equity, so that'll go up. Equipment depreciation is an expense, and expenses decrease stockholders' equity, so I need a negative there. And accumulated depreciation is a contra asset, so assets have debit balances. I credit it, so my assets are going to go down. Wages expense make my net income go down, so it makes my stockholders' equity go down. And my liability, I'm crediting those, so I'm increasing my liability. So my liabilities are going up. Supplies expense make my net income go down. Stockholders' equity, therefore, also goes down. Expenses make stockholders' equity go down. Supplies is an asset. I'm crediting an asset, so it goes down. So you can see those effects on it. And then the last one, which I'll just do because I can do it very quick, we're going to talk about vertical analysis. Vertical analysis simply, let me show you the solution. Notice that this column is exactly the same as this column. Exactly. And this column is exactly the same as this column. Okay? Then what I do is I take everything as a percent of total sales. So 70 divided by 88, 70,080 divided by 88,988 is 78%. 18,908 divided by this line. Okay, just made it a little bit easier for myself. Every number is divided by the line I circled. So this one divided by that is 78%. 18,908 divided by that is 21%. That divided by itself is 100%. 62,752 divided by that is 70%, etc., etc. And then if I do the prior year the same way, this divided by that is 81%. This divided by that is 18%. This divided by that is 72%. So what this tells me is, let's talk about the expenses first. I want to know for every dollar of sales how much winds up as net income and how many cents of it is used up for different costs. So for instance, whenever you're dealing with percents, think of them as a dollar bill. So I have a dollar bill in sales, 70 cents of that dollar goes to cover the cost of the sales. 12 cents of every dollar goes to cover fulfillment. 4 cents goes to cover marketing. 10 cents goes to cover technology and content. And 0.2 cents, not 2 cents, but 0.2 cents goes to cover income from operations. Look what we did the year before. 1 cent of every dollar went to net income. So income from operations being net income, by the way, guys. So 1 cent was last year, and this year only 0.2 cents. And so I'm going to ask myself, what in the world changed? Where did I have 1 cent of every sales dollar went to cover net income, and this year only a fraction of a cent wound up as net income? And so now I can see what happened, but actually cost of sales went down. Fulfillment went up. This went up. This technology and content went up. So I can kind of identify where for every dollar of sale, where it went to. What did it go to spend and how much wound up as net income? And as you can see, I'm doing worse. I can also see that of my sales dollars, 81% was from product and 18% was from service, and now I switch from service to the other way. My service sales went up a little bit, my product sales went down a little bit. So you can kind of read through this and notice that this is good. My cost of sales changed, but I had other items that offset it. And again, think of percents as a dollar, and so I can compare 2 years on a more equal basis. That's it. Have a good weekend.